Hello and welcome to another Smaulgld live stream. Today is Monday, October 8th, 2018. And tonight's topic is why Wall Street wants and needs a crypto bubble. So we're going to get into that, but before we do, just cover quickly the news of the day, the gold and silver prices, the crypto prices, and then we'll head straight into our topic. Well, today, President Trump had a formal swearing in of Justice Kavanaugh. We also saw that McConnell, the head of the Senate, is looking to have a he's looking to have a investigation into the leaks regarding the Blasey Ford letter. And then also the Republican Party in Alaska is looking to censor Murkowski for voting against Justice Kavanaugh. She was the only Republican to do so. So that's the fallout from the swearing in. It looks like that was kind of the cleanup. You've got Kavanaugh now sworn in, and now they're looking into how the process was conducted and also how Murkowski voted and what repercussions, if any, she should face, possibly losing funding and maybe even encouraging other Republicans to run against her. But I don't think she's up until 2022, so it's quite a ways away. All right, let's take a look now at our gold and silver prices. So the gold price today, well, we're not really seeing any good follow through on our gold prices or our silver prices. The gold price opened up at 1203 and didn't get much higher than that. Got all the way down to 1183 and closed at around 1190, which is so-so. Not very good. Silver did a little worse. Silver had a pretty bad day today. It opened at 1463. Didn't get much higher than that either. And all the way down to 1424 and closed the day at 1438. So not a big day there for silver either. What does that do for our gold-silver ratio? I know a lot of you believe in this, that somehow it's destined to come down 16 to 1. This isn't investment advice, but I'll tell you, forget it. We've gone through this before. I'm not going to go through my reasons, but the gold-silver ratio hanging above 82.74. Over on the crypto side, we had a bit of a surge in the crypto prices. It wasn't a big surge, but we did have Bitcoin moved up to about 6,600, a little over that. That's up over 1%. Ethereum got as high as about 230 almost. It's at 227 now, up 2%. And Litecoin at about $59, 59 and a quarter. That's up 2.3%. Ethereum Classic can't seem to get above 11. It's at 1091. That's flat. And Bcash or Bitcoin Cash 526 up 1.63. Let's see if we got any other charts to show you. Oh, that's it for the charts. So let's take a look now at our topic for the evening, which is why Wall Street wants and needs a crypto bubble. Now, generally, when people talk about cryptocurrencies, they fall into two camps. You have the one camp that are Bitcoin or cryptocurrency fanatics. They're the people that you see. They'll tell you about cryptocurrencies. They'll tell you to do research. They're telling you you're missing out. They'll tell you they're going to change the world. They're going to destroy central banks. The world's going to be a better place. And the whole world revolves around cryptocurrencies. Then you got the other side, where people who do not believe in cryptocurrencies insist they're going to zero, insist that they're worthless. They're worried that there's some type of CIA plot. They worry that they're there to usher in a cashless society and that they're utterly worthless and they've got no use for them. Now, many of you know I don't subscribe to either of those theories. I don't think that they're going to take over the world. I also don't think they're utterly worthless. I also don't think they're a plot. Now, the whole idea that they're there to bring in a cashless society is pretty much ridiculous because we already have a cashless society. We were heading towards a cashless society before cryptos even came out. Most of our transactions, most of the dollars and whatever other fiat currency you use are in digital form. Your credit card, your bank account, they're not even backed by cash, which is unbacked to begin with. 2/3 of Americans, I think it's only $1 trillion worth of cash is held overseas. Most of our transactions, under 10%, are not in cash. So we already are cashless. The idea that cryptocurrencies are going to somehow usher that in, not true, because we're already there. Now, as to crushing central banks and all the game-changing and world-changing things that cryptocurrencies are going to do, maybe, but I think it's a little more mundane than that. Now, my view is that Wall Street wants to embrace this. They want to use the Securities Exchange Commission, the CFTC, the taxing authorities, all of the accoutrements of government and tracking to bring this whole stuff into the system. They say, why would they want to do that? Well, because they're worried that it's going to destroy them. Maybe. But I think the reasoning for wanting to do that is more on the upside than the downside. In other words, yes, they say fear and greed are what drives most financial decisions. So you could say that Wall Street is fearful that if they don't get a handle on this cryptocurrency stuff, well, they could be driven out of business, as some of the Bitcoin fanatics might have you believe. And then also the greed is probably an even bigger motivating factor because there's a lot of money in cryptocurrencies. And so the banks have been playing this whole game back and forth. They're not interested in Bitcoin. They view Bitcoin as, what's his name? Jamie Dimon says it's some type of fraud, that he wouldn't want anybody working for him investing in Bitcoin. So the bankers play this whole game that they're not into cryptocurrencies. They think it's bad. But at the same time, they're all making their moves. And I look at this as somewhat as how the mobsters in Godfather, if you remember that scene where they're trying to figure out whether they're going to get into narcotics, and morally they're against it. It's not what they've done traditionally. They did the what they call good guy crime. They did gambling. Everybody likes gambling, things like that. And they didn't want to get into narcotics, but they knew if they didn't get into them, that was the big money. There's a scene where Tom Hagen tells the Don, if we don't get into it, somebody else will. Somebody else does, then they get the money, they get the power, and then you're screwed. So banks know this. They also know there's a lot of money in Bitcoin. So they're lining up to do it. And I'm going to give you some examples of what they've been doing. In the Week in Review, we went through some of them. We'll go through some of them in a little bit more detail tonight about what Wall Street is planning and why they're actually planning this, because there's big money. But let's go back through history and talk about what's basically been happening the last 30 years. Ever since the financial, or Black Monday or Friday, whatever it was, in 1987, when the stock market fell, that's when Greenspan, newly minted Federal Reserve Chairman by Ronald Reagan, decided, nope, we can't have the stock market go down. The stock market, I realize the U.S. government knows, is the second most important asset that it has in the Treasury behind the dollar. Dollar's the most important. The second one is the financial markets. The two go hand in glove, or hand in hand, or hand in hand, and glove in glove. They know that in order to attract capital into the dollar, not just for treasuries, but also just capital in general, they need to have a robust stock market. If you think that that's not the case, you can see Donald Trump bragging about the stock market. Many people think he's out of his mind for doing so, and they think the collapse is going to come. But what they've proven since 1987 is that they can and will inflate the stock market almost at will. 1987, the stock market fell. Alan Greenspan said back then, we stand ready, willing, and able to inject liquidity, and they did. The stock price went up. Stock market went up. That's around the same time they created the President's Working Group on Financial Markets. That is the plunge protection team. That includes the president, the head of the Treasury, the head of the SEC, the head of the Federal Reserve, and they work together first to see if they can get private solutions they put money in. If not, they will bring the power of the government and its treasury and whatever else they can do to boost the markets. We have not had a sustained stock market depression or a sustained correction in the stock market since 1987. Now, those of you old enough to remember, there were periods of times in the 60s and 70s we had 2, 3, 4 years the stock market really either didn't move or went down steadily. You don't have that anymore. Why? U.S. Fed, other central banks are there to dump money into the stock market. Don't believe it? Look at the Swiss National Bank. They have $1 billion worth of U.S. equities. And it's not all granddad stocks, dividend-paying stocks. They got Tesla. They got Zillow. They have they got companies that don't even make any money. They have no dividend, and yet they buy them. Central banks are interested in boosting asset prices. Why? Well, they know that because of the way they devalue their currencies and the way they keep interest rates low, that production and incomes are not rising. So what they have to do is they have to boost asset prices. It's the trickle-down effect, where if they figure they create a wealth effect, asset prices go higher, people feel richer, maybe they can boost the economy that way. So what they do is they print money, they lower interest rates, and then they hope for the best. And then the standard of living of those with assets, their assets get inflated and they get rich. People without assets, well, they haven't seen much of an increase in the standard of living in the past 30 years. So let's go back now just say the last 25 years. So from around 1995 to 2000, you had a dot-com bubble. Now, the issue with the dot-com bubble was there was a lot of speculative mania. That's fine, but there really wasn't much behind it. A lot of companies just added .com to their name, and bingo star, the prices of those companies rose. But that couldn't be sustained, and you saw, I think it was in early 2000, Barron's magazine had on the cover .bomb. It basically said, why are these companies worth billions of dollars when they don't have much in the way of revenue? They don't have any profits. And that's when collectively the market woke up and said, yeah, why do I have pets.com? Why do I have all these .com companies? And as you saw out of the .com system, yes, the internet did eventually become the way we do business, the way we transact, the way we interact, and so on. But some of those companies are no longer with us. Netscape, Pointcast.com, all these companies that had big promise, they went nowhere. And the only companies that are really around since then, that time period, Amazon, Yahoo, and maybe eBay. But AOL, athome.com, pets.com, webvan.com, they're all gone. And so the problem with a stock market, trying to rely on the stock market for Wall Street, while they made a fortune pumping stocks, you had Mary Meeker, you had that guy, I can't remember his name, he runs Business Insider now, writing research reports for Morgan Stanley and Goldman Sachs, whatever banks they worked for, saying strong buy for all these companies that weren't making any money. Actually, he got in trouble. I can't think of the guy's name right now. I think he went to jail. He pled guilty. That was the .com bubble. And while you can make money for that for a period during a bubble, it's not sustainable, because eventually someone wakes up, or the market wakes up and says, why do we own these stocks? And down went the .com bubble into flames. Well, what happens in a normal Austrian economy, free market, or even Chicago School of Economics economy? The debt would get liquidated, the bad companies would go out of business, and from the ashes, you'd have a bit of a recession, and then the economy would come back, and the allocation of capital would be better, meaning that instead of pouring money into stupid companies that just have a .com next to them, the financial players, the entrepreneurs would invest money in something that might make a profit. Well, ever since then, profits don't matter. Why? Because Wall Street's found a way to boost companies even if they don't make profits. Look at Tesla. And Tesla is, and this, again, none of this is investment advice. This is just analysis. Make your own decisions. I'm not talking about individual stocks. I'm talking about as macro as you can get here. So again, not investment advice. But you look at companies like that, they wouldn't have a shot of making it in the financial markets 40 years ago. Why? They don't make any money. If they don't make any money, how do you value them? Well, they've dispensed with that. They just talk about different metrics that during the dot-com era, they came up with all types of metrics, eyeballs, who knows, it's silly metrics on which they measure companies, but it had nothing to do with dollars and cents. All right, so after the dot-com bubble burst, you would think they would just leave it alone, but of course central bankers are interventionists. So you had Paul Krugman, an economist back then, 2002, saying Greenspan needs to create a housing bubble. Why? They needed to boost asset prices. They weren't going to be able to say, hey, let's reflate the dot-com bubble. That souffle was not going to get reheated. So they went into, Alan Greenspan went into action just like he did in 1987 after the stock market burst. He added liquidity in 1987. The stock market came roaring back. Well, after the dot-com bubble, it was his time, the maestro, to come to the rescue. So he started hammering interest rates down, 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 down again. After he had raised them, essentially cracking the dot-com bubble. And that indeed, from 2002 to about 2005 or 6, we had a roaring housing bubble. And that created jobs, construction. Everyone could just sign and get a loan. You had liar's loans, ninja loans, all types of loans, where basically anyone with a pulse could get a loan and buy a house. People that were running nail salons in their house would just keep selling one house for $200,000, then to $400,000, then $800,000, flipping houses, big bubble. And what happened? Well, it all came tumbling down. Everyone knows the story. 2008. They were not only, the reason they were selling the houses and giving the loans is that was even more money for them if they can package them up into mortgage-backed securities, sell them to banks, do derivatives on them. It's a fortune. So there's a lot of economic activity, as you can see. In the dot-com bubble, you get the rising stock prices, you get a lot of trades, you got a lot of analysis, a lot of work going on, IPOs. So Wall Street makes a fortune in the dot-com bubble. They make a fortune in a real estate bubble. You would think, how does Wall Street make money in real estate? Well, as I just mentioned, mortgage-backed securities. In fact, those were all the ones that went bad that the Federal Reserve had to buy $2.5 trillion worth off of Goldman Sachs and some of the other too big to fail banks in order to stabilize them. So Wall Street loves a bubble. They've had the dot-com bubble, then they had the housing bubble. And in both instances, as artificial as it may be, they did create economic activity. You could say it's artificial, but people bought real things and real assets during that time, and a lot of people got wiped out. But Wall Street didn't get wiped out. In the dot-com bubble, they didn't get wiped out, and they should have been wiped out for messing around with the mortgage-backed securities, but they didn't. Why? Because they got bailed out. Now you can see the problem with a stock market bubble and a real estate bubble. They both have inherent flaws. One, the stock market bubble that you had in the dot-com bubble is eventually people realize you can't keep pushing the stock higher and higher and higher just because it has .com behind it. I mean, you can get away with, 300 times revenue, 700 times revenue. At some point, no one's going to buy it. And you can really just, I guess the central bank can buy all the stocks and probably and keep the prices high. But it's very hard to get widespread participation in something when there's no profits. Same issue or similar issue in a real estate problem. In a real estate bubble, you're limited. Yes, you can issue loans to people that make $20,000 to buy a $600,000 house, but that's about as far as you can get. And even that's way past that, stretching it, because they'll never be able to pay it back. You can give them 30-year loans, 50-year loans, no money down. But generally, the prices of real estate have to be somewhat tethered to incomes. So there is a limit. You cannot make a $200,000 home $6 million. It's hard to do. They'd love to be able to do it, but someone has to buy it, and it's based on income. You have to issue the debt. So, and also you have to take the collateral. If the debt goes bad, you have to take the houses. If you have to foreclose, it's a big mess. So Wall Street is not as big of a fan of a housing bubble as they are a stock bubble, because there's a lot of debt involved, and there is a limit to how high housing prices can go. There's certain areas they can go higher and higher and higher, like San Francisco, maybe Vancouver, New York, where you get foreign money, they pay cash, and you could take a $1 million home and make it 10 million, 12 million, 15 million. But across the country, you can't take $200,000, $150,000 homes and turn them all into $2 million homes. The incomes aren't there. And part of the reason the incomes aren't there is because of the way the financial system is set up. So it's hard to make a housing bubble really, really, really make you a fortune. And there's a lot of risks in a housing bubble from the Wall Street perspective, as we have seen. All right, so the housing bubble crashes. What do? Same thing. They don't say, oh, well, we'll just let this ride out. We'll let the smart people with the money figure out what they should do with it. People who lost their homes, they'll lose their homes. That's fine. And then people who are more prudent and the housing prices are lower, maybe they'll buy those assets and the economy will come back on solid footing. No way, Jose. That's not what they did. They said, we can't have this. Everyone has to stay in it. We can't have foreclosures. We can't have any slowdown in the economy. We're going to buy up all those mortgage-backed securities as if they're good. We're going to do $1 trillion bailout. And then we're going to do quantitative easing. We're going to buy mortgage-backed securities. We're going to buy U.S. treasuries. We're just going to print a lot of money and hope this all goes away. And Bernanke said when they did that the rationale was we need to create a wealth effect. Well, they just tried that, and the wealth was lost. And they said, well, we know how to do it. All we have to do is move it up again. Just put more money into it. More debt, more printing. And that's what happened. So in 2009, they did QE and nothing happened. Stock market didn't go higher. Real estate prices were stuck where they were, and they kept doing QE, and they kept lowering interest rates. They got them at zero. And it took like 2.5 years for the stock market and the real estate market to really react to all this stimulus, and finally it did. All right, fast forward to 2018. Well, the stock market and the real estate market started moving around 2011 or 12, and they've been moving ever since. Now, both the stock market and the equity markets, and the real estate markets, most people would say are at their limits. There's not much higher you can boost housing prices. Why? Because if people's incomes aren't going up that much, there's only and interest rates are going higher. It's hard to get the housing prices much higher, and we're seeing evidence of that in New York City. They're doing price reductions, so the housing bubble can't go much higher. Now there may be some legs in the stock market. You can pour more money into it. You can try to rationalize why stocks should be higher. But most people are looking at it and saying it's going to be a tough putt to double from here, the stock market, or even go up another 50%. And that's what they need. They need to keep things going. The last thing they want is flat stock prices, declining stock prices. But you do have that issue, is how much money are people going to pay for stocks that don't make any money? You could hope maybe you grow into it. But so right now, that leads us to where I think we are with cryptocurrencies. Now, is the next bubble going to be pot stocks? There's not enough of them. They're not going to be able to use the marijuana stocks to continue the stock market's gains. So real estate and stocks both have limitations. Real estate's on income. Stocks is on valuations. And frankly, we're at probably the end of the rope on both of them. The stock market's been going up for 5 years. The real estate market's been going up for 5 years. And there's limitations on how far you could send both of them. Enter cryptocurrencies. Cryptocurrencies allow the banks to continue this boom-bust bubble economy that they have created. Cryptocurrencies, they have seen, are proven to be big money makers. Over the last 5 years, we have seen early adopters make millions and billions. Crypto people bought Bitcoin, Litecoin, whatever they bought years ago. They're buying Lambos, and even with the prices where they are today, remember, a lot of people bought Bitcoin $20, $30. So it went to $20,000, now it's at $6,000. They made fortunes. People bought Litecoin for $1 or $2, went to $50, went to $100, went to $200. Yeah, the price is down to $60, but so many people made a lot of money. Then, over the last couple of years, a lot of ICOs, initial coin offerings, came out. As ridiculous as IPOs were during the .com, or worse. All you had to have is blockchain this or blockchain that and token this or token that. And not only did they have tens of billions of dollars of these ICOs come out, rivaling the IPO markets of 2017, they were done by people with zero or next to zero financial experience. You had people, and I'm not going to name names, that were pumping and touting ICOs on their YouTube channels, and I don't know how much they made off of that, but a lot of those ICOs did bring in hundreds of millions of dollars. Now, Wall Street sees this, and this has never happened before. Usually the big money is made by Wall Street, and then they dump it onto Main Street, and they collect their money. So normally what happens is a company is funded by Silicon Valley, seed capital they call it. They make sure the company gets ready to go. Then they work with Wall Street to bring it public. They price it. So, they may have paid 15 cents a share. They bring it public at $20 a share. And then the bankers go into overdrive selling it to clients at $50 a share. And next thing you know, for 2 or 3 years, it's trading for $300 or $400. That's a typical IPO in the last 15, 20, 30 years. Is the people who make the money are the people who get in first. Silicon Valley executives, Silicon Valley venture capitalists, Wall Street types, and so on. And as the retail investor, maybe he catches Netflix after it's been out for 2 years, and they've managed to pay, those companies have paid off. But this particular thing, what happened in cryptocurrencies, was the average schmo or tech geek got in and made the big money, and Wall Street looked at that and they said, no, we want this. This is what we want. We want to get into that business. Now, the problem they have getting into that business, they know they just can't go on YouTube and start touting a white paper. They're used to, and their clients aren't going to buy that kind of stuff. Their clients their institutional investors, they need to have all the regulation and all the bells and whistles to invest in this stuff. So, what Wall Street is looking at now, and it's obvious, anyone who's trying to tell you that they're going to outlaw Bitcoin, they're going to ban it and arrest everyone, they're just trying to pump whatever precious metals they can, because that's not happening. We saw the CFTC head the other day say cryptos are here to stay. You've seen the SEC bending over backwards trying to get regulation in place. And why do they want to get the regulation in place? Because they care? No, because Wall Street, the big money, wants them to. They work for Wall Street. They don't make policy. They're not there. They're not worried about anything. They just want to make sure Wall Street gets what Wall Street wants, which is a properly regulated environment, so they can go to town issuing ICOs. Now, a lot of people say that's ridiculous. That's not true. If you go to sec.gov, I'm going to ask you to do this right now. I'm going to put a link in there. Anyone who doubts that somehow they're going to ban Bitcoin and cryptocurrencies, nonsense. That sec.gov is talking about how they're going to try to make sure that ICOs are safe. They're not looking to ban anything. They have a page, initial coin offerings. They're all for it. They want to make sure it's done right. And why? No one has registered an ICO. They issue white papers and people throw billions of dollars at these things, and bankers don't make any money, accountants don't make any money, lawyers don't make any money. Silicon Valley didn't make any money whatsoever on any of those ICOs. They want registered ICOs. Why? Also, the SEC makes hundreds of thousands of dollars to review an initial public offering document. They'll make the same amount of money for initial coin offering documents. This is big money that can be institutionalized, meaning that all the people that make money off of Wall Street on IPOs, on mergers, on derivatives, on trading products, on exchanges, creating ETFs, storage fees, custody fees, accountants fees, lawyers fees. Cryptocurrency has the capacity to create an equal, if not greater, market than they already have in equities. Here's why. Every equity company can issue a token and do an ICO of whatever they want. Plus, other new companies will come to market. And if Wall Street controls all this, you'll have the same pipeline. Silicon Valley will run the ICOs, and what the SEC will do is go after people who are running ICOs that are not registered, to the point where no one will even do it because it'll be so illegal that they won't run illegal ICOs. And that'll mean you're back to the old power structure. You're going to have to go hand in hat to some Silicon Valley company who's going to give you the seed capital, who's going to help you go public with an ICO. They're going to introduce you to lawyers, to bankers, to accountants, and they're going to bring in their own management teams. And this is big, big money. It's not just Bitcoin. Bitcoin's just a coin. They'll start with that. Already they're making money off of Bitcoin. The CFTC, they got futures on Bitcoin. They're going to have Bitcoin ETFs. Once they approve, the SEC approves a Bitcoin ETF, they'll approve a Litecoin ETF, a Ethereum ETF, a Bitcoin Cash ETF, a Monero ETF, an ETF of a bunch of cryptocurrencies. It will never end. There's so much money behind this. Now, this is not the vision the people that are into cryptocurrencies are any way, shape, or form in favor of. This is their nightmare. They don't want Wall Street to corral this. But that's what's going to happen. Yes, people will trade in the dark web, and they'll have privacy coins, and they'll do stuff, and they'll chase those people down, and they may not catch everyone, but they don't catch everyone today with cash. So that's the price you pay to get Wall Street, this multi-trillion, potential trillion-dollar market. Now, this isn't something I'm just making up and envisioning. This is what's happening behind the scenes. You're seeing the moves. We're going to go through some of them. But the ideal thing about a cryptocurrency bubble is you don't need monetary or fiscal stimulus at all. Here's why. It doesn't matter what the interest rates are. It doesn't matter what the tax. It doesn't matter anything. So you don't need any policy to make it happen. You just need regulation. But more importantly, unlike a stock bubble that you try to create, you don't need valuations. Why? Who knows how much these things are worth? You can make up what they're worth. I always say Bitcoin can be worth $1. It could be worth $100. It could be worth $1,000. It could be worth $10,000. It could be worth $20,000. It already has been. Why can't it be worth $200,000? Why not $2 million? Why not $20 million? Who knows? Who cares? So they can continue to boost these things, these assets, and to trade them, and to put them in ETFs, to store them and charge custody fees, and the whole raft. And that's just one coin. That's just Bitcoin. There's also no need for debt. There's no need for any type of income requirements like you have in a housing bubble. You don't have to borrow money to buy a Bitcoin. You don't have to have a certain income. And the price can be, as I mentioned, go as high as you want. So you can create an entire alternative stock market as large as the one is today, or even if it's not. That's not, even if they only add incrementally, they just look at it, well, it's just an asset class, and people will allocate 2 to 5%, as we heard one guy saying. Well, then they've just expanded the market 2 to 5%. However, I think they're going to do much more than that, because the ICO market, I think once they get that down, is going to be very big. It already is big, and there's no regulation on it. That's just on the kids doing it. And if, as I mentioned, they start taking regular companies and having them issue tokens, that'll be all the rage. And they'll be able to grow their way out of much faster and much quicker than any bursting housing bubble or any bursting stock market bubble, because money will be pouring or moving from those assets into these crypto assets. Now you can say, oh, they're not worth anything, they're digital illusions. They don't care about that. That's what a lot of people don't understand, is that they don't run this as if they're not stackers. They're not interested in physical assets. They've gone well past that. So yes, it's a bubble. Yes, it's artificial. Doesn't matter. That doesn't mean that, in my opinion, that they're not going to push this thing as far as they can go. It's a dream for them. They don't have to worry about stock market valuations. They don't have to worry about people being able to afford the higher prices. You can collateralize, securitize, you can do derivatives. This opens up exponentially the amount of banking and whatever the other financial shenanigans they want to do. Now let's take a look now at, I went through this yesterday, but quickly on the week in review. Already, you have the New York Stock Exchange, parent company, working with Microsoft to create a physically delivered Bitcoin future that will be physically delivered in Bitcoin. They have solutions for buying, selling, storing, and spending digital assets, and they're working with Starbucks on that. And it doesn't stop at Bitcoin. It starts with Bitcoin. Then they add Litecoin. Then they add all the other coins. And it just grows and grows and grows. At least I think that's what they're thinking of. Now, it's not just backed. I mean, Microsoft and New York Stock Exchange, they're not counting on it becoming illegal. They've been working on this for 2 years. They know this is where it's all headed. And they love the idea that they don't have to worry about valuations. There's no need whatsoever. So they're saying that the back could provide an on-ramp for institutions into cryptocurrency superhighway. Why? That's where the money is going to be. All right, so then you've got this guy, Rick Edelman. He's saying that he's a big fund manager. He has institutional clients. They don't know how to invest in this stuff. They're not going to go out and buy a Trezor and put, how many millions of dollars on it. They need all these fancy dancy custodial arrangements. They need registered products. And that's why they're working on trying to figure out how to approve ETFs and alternative trading platforms, getting them registered, like Coinbase, which is not yet, Poloniex, which has Goldman Sachs money in it. There's so much money behind all this stuff, and they haven't even gotten started yet. I saw one stable coin had $130 million invested in it. That's just a piece of the puzzle, to have a stable coin that you can use on your exchange, or it's just like Tether, to trade in and out. So they wouldn't invest all that money unless they thought that these platforms are going to have a big, big return. So Charles Schwab, board member, joins Coinbase. Now, why would Charles Schwab be interested in Coinbase? Well, the same reason Fidelity is interested in Coinbase. Coinbase makes trading fees on cryptocurrencies that Charles Schwab gets none of, that Fidelity gets none of. Fidelity now allows you to, for over a year now, to integrate your Coinbase account with your Fidelity account as well. They are eyeing this. They're either going to buy Coinbase or they're going to set up their own crypto trading. Charles Schwab, probably the same thing. They haven't admitted it yet, but Ameritrade admitted the other day that's precisely what they want to do. TD Ameritrade has now invested in a company. It's called ErisX, I think, and it's going to rival Bakkt. It's the same concept. It won't launch till next year, but they want to be able to buy, sell, trade, deliver, store cryptocurrencies. Now, why do they want to do that? Because it's going to be illegal, or these cryptos are expected to go to zero? No. Then you've got all the work being done on making Bitcoin and Litecoin more useful for payments. Now, I'm not excited about, I could care less about this stuff, really. I'm just showing people that it's not these two sides, that Bitcoin is going to change the world and can crush banking, or Bitcoin is worthless, it's going to zero. This is far beyond Bitcoin. This is the valve. This is Wall Street. If you're looking at that picture there, Bitcoin's a dirty business. There's a lot of money in Bitcoin. It's not Bitcoin. I should say, I wrote this myself, but I should have written there's a lot of money in cryptocurrencies. That's how they're looking at this. And look, you got the guy here, another one. The guy who runs the Yale Endowment. They have like $35 billion at Yale. Well, they're going to buy some. He wants to get into cryptocurrencies. Why not? Well, they can go higher. That's all they're looking for. Anything that can go higher, they're interested in. And the CFTC chairman said the other day, if you're listening to the podcast I did, is that cryptocurrencies are here to stay. And he was also saying that while we're trying to be innovative and be ahead of other countries, we also want to make sure we do it right. So the SEC and the CFTC have long past ever thinking they're going to stop this. They're trying to create it so that Wall Street is going to make money off of this. And they're going to get their fees and they're going to remain relevant. And then, if they're relevant and they're making a lot of fees themselves, meaning through their oversight of these markets, well, then they'll have more money to go after enforcement on things that they don't like tax evasion, money laundering, and so on. But the idea that anyone who's buying or selling cryptocurrencies is going to be arrested as a money launderer is ridiculous. They're not going to arrest Bill Gates and Microsoft for money laundering. Why? Because they'll have it in a regulated exchange. It's the same idea. When people call it a Ponzi scheme, you may think it's a Ponzi scheme. You could make an argument it's a Ponzi scheme. But the CFTC would not approve Bitcoin futures if they thought it was a Ponzi scheme. They call it a commodity. They don't call it a Ponzi scheme. So you can call fiat currency worthless. That's fine. That's your opinion. Send them to me, because fiat currencies actually buy stuff. You may think and can make an argument that Bitcoin is a Ponzi scheme. But in the eyes of the law, they're calling it a commodity. Now, a lot of people say that's not a commodity. That's ridiculous. It's a payment system. It's code. But that's not the point. The point is what you think is irrelevant, because the regulatory framework is what's going to decide what the value of all this is, even more so than the technological innovations. So that's basically where we are. We have all these large money coming into the cryptocurrencies. And my guess is right now, the prices have been very, very stable. And I think they want it to be at this price. And then when they launch all this stuff, then they can reap the benefits of the prices rising. More money will be attracted into cryptocurrencies because they'll fear of missing out and so on. And I think that's where all this is headed. Again, this isn't investment advice. This is just macro view of all that's going on that I see that's happening. Lots of money being invested in the space. This Ameritrade just last week, ErisX, they're going to start one. So it's not like, Microsoft is nuts or Goldman Sachs is nuts for investing in Poloniex, or Ameritrade is nuts for investing in ErisX. No, they're all investing in this somehow. TG Ameritrade. And let's see if there's anything else. I mean, that pretty much gives you the idea of what's going on. There is a tremendous amount of, Malta. And there's countries now that are competing for this type of dollar. And that was one of the questions they asked the CFTC chairman is, look, we don't want to fall behind here. And he's like, no, we won't. We're going to do it right. But Malta is trying to be like Crypto Island. Their president's invested in cryptocurrency. They're going to have this massive crypto conference at the end of the month. And he says that Bitcoin is inevitably the future of money. I don't agree with all this hyperbole. You know that. I'm totally against all that. What I'm saying is I'm seeing tremendous amount of manpower, woman power, people kind power, innovation, and money being thrown at this. And the people that are throwing the money at it are the people that are in the position to make it happen. See, when people are on Twitter just giving their opinions, that's their opinion. They have no influence. You can go on trash Bitcoin on Twitter. Who are you? Who am I? Doesn't matter. But these are the people that know if they throw money into something, they know they're going to get a return on it. When you hear about JP Morgan never loses on a trade, these people aren't used to losing money on a trade just by the sheer fact that they're throwing money into this system. And they're trying to get the regulations through precisely. The longer they wait, the better it is. Because that means that they get the regulations, they're comfortable, they get the selling period with their clients, and they move them all into this. That's what I think is happening. I could be 100% wrong, but that's my analysis. I want to know what you think. We have a deadline for reviewing 9 new Bitcoin ETFs for the SEC by the end of October. Maybe they don't get put through. They probably don't want them to get put through. It gives them a longer time to wait. It'll probably drive the price down if they don't go through. That gives them more time to continue to work on projects, and eventually, once they approve and they get the regulatory system in place, they'll be ready to go and try to make money. And that may just be around the time when the stock market and the real estate markets go down, and then they've got their ability to boost the markets, and more importantly, for them to continue to make money. That's their game there. All right, let's take a look at the questions that we may have or the comments. All right. Jeffrey Gotts is here. Hello. Max Strong is here. Greetings. Coliseum says peace and prosperity. Or sup says R.W. Graha. I think the stock market will do great as the bond market declines. It could be. P ratios are ridiculous. That is correct. Good to know. I read Benjamin Graham and it jaded me against equities at current prices. See, eventually that's what will happen for a lot of people. And rather than pour money in to keep the stock market prices elevated, might make sense to push money over to some more speculative things like cryptos. But how do you know which crypto is going to be currency 5, 10, 15 years from now? First of all, I don't know anything. I told you, I'm not giving investment advice. You got to figure out if I'm right and which currencies are going to be the right ones. And it's not just currencies. They're not just cryptocurrencies. There's going to be tokens. There already are tokens. They're similar to equity shares, depending on how they structure them. So who knows? There'll be winners, there'll be losers. Runs into the same problem with intrinsic value that fiat currencies are having presently. But you see, that's nonsense. There is no intrinsic value issue. That's only amongst the gold and silver crowd. The rest of the world could care less. You tell them I have $1 million. They say, yeah, but it's not backed by anything. They don't care. $1 million is $1 million. Now, you may have a preference that you don't trust it. It's toilet paper. I don't want dollars. The world wants dollars. Whether you want them or not, whether you think they're worthless, whether you think they don't have intrinsic value. Do you think people stopped working in 1971 when Nixon took the world off the gold standard? They say, oh, we're not working for paper anymore. No, we're not going to work anymore. People have been working for paper for 50 years almost. So the idea that the intrinsic value matters, yeah, theoretically it matters, bothers me, but it doesn't matter. It really doesn't matter. And cryptocurrencies prove it. You think about it, they're just totally created out of thin air. You're basically solving math problems that don't need to be solved other than to solve them to make the system work. That's really what it is. It's like saying, go run around the block 100 times and I'll pay you $10. Why? Because I think it's worth $10 for you to run around the block. It's not backed by anything other than you running around the block. So intrinsic value, I think people are too hung up on that. Not because they're wrong to think that way, but the rest of the world doesn't think that way. And it hasn't mattered for 50 years. Wealth is now measured in digital. I don't care what anyone says. Digital illusions of wealth. Yeah, okay, but it's still wealth. You can call it digital illusions. The numbers on your screen. You could take those numbers on your screen. You can go buy stuff. You can buy yachts, Lambos, houses, cars, whatever you want. So the idea that they're just digital, well, send your digits my way. All right, let's see what else we got here. Bitcoin will be here in 29 years. It's almost 10 years already. Who knows? I mean, I'm not making predictions on what's going to be. I'm just saying that money is pouring into cryptos and no one's paying attention because the only thing that catches people's eyes is the price. See, I don't look at the price because I'm not invested heavily in any of this stuff. So I'm not looking at it as I only care when the price goes up. I'm looking at what is going on in this whole space, and a lot is going on. And people are only going to care when the price goes up. Why not Ethereum? Why not Bitcoin Cash? Why not Ripple? I don't know. I do know that the bankers do like Ripple because it's a centralized type of product. They all have problems and it gets deep real quickly. Bitcoin's a safe bet, says Jeffrey Gotts. Well, that could be for now. If you want to make short-term profits, speculate in altcoins, says Jeffrey Gotts, but invest in Bitcoins, it's the most stable. That's my take. $5 billion a day. See, $5 billion a day is traded in Bitcoin. That's a lot, but that's like on these startup exchanges, Coinbase, Binance, all these. They're worth a lot of money now, but I mean, they were not the Wall Street companies that did this. It's a good idea since it might catch. Oh, okay. Crypto is digital, and so is our dollar in general, backed by nothing, Coolzium. You're absolutely right. That's my point. Crypto is not the threat. We're already digital. We were digital before cryptos came along, and they're not back. But does that mean that you don't work anymore because you're getting paid in digital? You're not getting paid in gold or silver. Oh, in the Roman times, they gave you a coin. Yeah. In the Roman times, too. They rode chariots, and they wore togas. We're not in the Roman times. People work for fiat currencies, unbacked currencies. The fiat currencies aren't even backed by the amount of physical cash, which is worthless, just paper. So does that stop you from working? Does that stop people from accumulating fortunes? No way, Jose. It's mind-boggling to me that we live in this world, that people get paid in digital fiat. They work for digital fiat. And then for some people to say that's not worth anything, it's just digital illusions. It's not intrinsic, it's not worth anything. Well, they're the people that are making millions of dollars are the ones drinking champagne and driving around in Lambos and living in big houses. It's the people who have a pile of silver in their basement that are wondering whether they're going to be able to meet their next rent check. I don't know, I cringe when I hear this. It's not intrinsic. That would only matter if the world cared. The world doesn't care. That's the big thing that I've learned. The world doesn't care what I think, or what silver pumpers think, or what gold pumpers think, or what stackers think. They don't care. The world isn't run by people who have gold and silver. Here, well, the ones who have the gold rule. No, they don't. It'd be nice if it was, but that's not how it is. All right. You can buy gold with Bitcoin right now. That you can. And you can buy silver with Ethereum. Even buying $100 in Bitcoin right now, worth it if it catches on, says Jeffrey Gotts. Yeah. Ethereum is not the same as Bitcoin, well, that's for sure. Bitcoin tries to solve a different problem, that's for sure. Litecoin, similar protocol. That is correct. Different security, but very similar. Bitcoin just wants to be hard money. Now, for some people to hear that, and I cringe at that too. It's not hard money. It's not intrinsic value, but it's digital hard money in that it's limited in issuance. What else? Go BTC. The institution will buy Bitcoin first, then the others. Absolutely. That's why they're trying to get the ETF for Bitcoin first. There's not going to be enough Bitcoin. And there's only, 21 million? There's not going to be enough of them where they're not going to start looking at other coins. But it's not just going to be the coins. They're going to do ICOs are where they're going to make their most money. Money will pour into Bitcoin, then the Litecoin, if I'm right. And again, this isn't investment advice. This is fantasy football here. But it'll go into the existing coins. But the real money, I think, will be made is when they start issuing their own coins. And I think that is where their big money is. And that's where they want to be. Registered ICOs, registered ETFs with all kinds of crypto crap in them. And not just Bitcoin, not just Litecoin, but all their ICOs in it. They'll have different ETFs with different baskets of ICOs in them. It'll be amazing. Would be reassuring if we can get a central bank on record buying Bitcoin. Yeah, well, I never even thought that was possible, but I think that's clearly possible now. I know central bank will say that for some time. If they did, they could crash a national currency. That's right. They're going to make Bitcoin into... See, once it gets in the ETFs, they'll probably take 80-90% of the Bitcoin out of circulation. It won't even be good for currency. That's when central banks will... But then I think the price will be much higher. Then they can hold it as like digital gold if they think. Now remember, a lot of people cringe when they... I cringe too when I say it, digital gold. Because I view them as totally different. I don't view Bitcoin as gold. Gold is inert. It sits there. You have it. It's done. Bitcoin relies on too many inputs. It goes up. It goes down. You need electricity. You need a way to get onto the blockchain. You need a functioning blockchain. You need a whole system for the whole thing to work. You need miners. You don't need anything for gold to work. It already is gold. It's perfect as it is. Russia's buying gold and silver hand over fist would be a hedge against a short. Yeah, that's a myth too. I report on Russia's gold every month. And Zero Hedge covers it every 3 or 4 months. My article publishes it there. They got $75 billion worth of gold. Yeah, they have 2,000 tons of gold. It's a lot of gold, but it's worth $75 billion. It's not a lot of money. And that's one of the largest gold hoards in the world. Gold money, PM, and crypto. Also credit card backed by gold. So if you're lucky, you can buy low, says Coolism. Okay. Let's see if we got any more questions here. Platform coins will do well alongside currency coins. Okay. Will the Z-Spec asks, will BTC ETF pass later this month? I don't know. But if you look at who these aren't like the Winklevoss twins. Not that they're too bitter or anything, but these are the regular like iShares company, the big companies who are trying to get their ETFs passed. I don't know if they will pass this time. The main reasons they are not approving the ETFs, from what I've read, and I've read all the SEC stuff, is they don't have what's called surveillance sharing agreements, so they can see what manipulation is going on. The first reason they didn't approve it like 2 years ago was because 80% of the trading took place in China, and they had no way of knowing what was going on over there. I think once either Coinbase gets registered with the SEC as an alternative trading platform, or let's say Backed, which is supposed to go live at the end of this year, gets registered with the SEC, gets its BIT license, all the SEC stuff, whatever it has to get, then I think the SEC will be comfortable approving a Bitcoin ETF. I don't know. I think it's 50-50 that they'll do it in October. The point is, though, they've now rejected over a dozen of these, which means there's a lot of interest in doing it, and at some point, they are going to have to. But I think once they get that surveillance sharing agreement with a U.S. registered entity, I think then they're going to be totally good to go on that. All right, everyone. Well, I want to thank you very much for listening. Remember, the hardest of all assets is not gold, is not silver. It is a Smaulgld mug. Mugs are good in all types of crises. You can barter with them. You can put your barter products in them. You can use them as mugs are good for self-defense. You can hurl them. You can open carry them. You can pound people with them. So get a Smaulgld mug. Mugs have been drinking vessels for 5,000 years. So Smaulgld mugs, you buy a Smaulgld mug. It does help out Smaulgld. And if you buy tonight, I will put in a Smaulgld game-changing eraser. Let me show you the mugs that are available. Let me show you what we got here. So you got your classic and super classic mugs. The super classic is the mug on the left, and that's $23.99 with free shipping. Priority shipping, you get a tracking code, and you get the Smaulgld Game Changer Eraser put right in there in a personal note from me, or you can buy the Smaulgld Classic mug. That's the one to the right, and same deal there, free shipping on that. Let me show you the Game Changer Eraser, though. These are the Game Changer Erasers that you get. Slap those right into your mug there, and also, if you really want to be cool, let me just show you something that a subscriber made for me here. People have sent me pictures of their mugs, but this one is a picture of Mug Life. This is you got the Smaulgld. That's the travel mug. And if you buy the travel mug, you got to buy that from the Smaulgld site. But that I can't put an eraser in because that gets shipped out from the manufacturer directly. That Smaulgld Game Changer Mug Life. That's the travel mug. Now we also have an espresso mug, which is smaller, and other items at the Smaulgld shop. You got hats, t-shirts, pens, and so on. So please check those out. It's a way of somehow paying for these server fees that I have. And if you really want to help out, I think I have 17 or 18 really cool patrons over on Patreon. And I'll give you the link for that. And then I will let you go, and we'll see you tomorrow night. But wait around for the Patreon link. And I think I've given you, yes, the Zazzle shop. But here is the patron coming up. And let me get it. Oh, look at that. Also, if you're interested in precious metals, I did give you the JD Bullion link. I make a small commission on that as well. That is not investment advice to buy gold or silver. But if you're going to buy gold or silver, you visited that site through the link, you're good to go. Pay the same price that you would pay if you had visited that site directly. So thank you very much, everyone, for listening. Appreciate your thoughts tonight. And we'll see you tomorrow at 8 o'clock Eastern Standard Time. Check out Smaulgld on BitChute, Minds.com, Gab.ai, Twitter, Facebook, and Google+. By the way, if anyone's a prepper, are you digitally prepared? A lot of people have their accounts. They have one email account. If that email went down, what would you have? So consider being on alternative platforms, getting something other than just a Gmail account, like a Proton email account, digital email account. Check out Smaulgld on BitChute and subscribe to Smaulgld.com so you can stay in touch in case this channel ever gets shut down. Thank you very much.